Well, hello, traders and investors. Today is June 25th. My name is Roger Scott, and I'm the senior trader for Wealth Press. Welcome to our morning edition. And as I always say, let's get into it right now. Now, folks, today's a big day. We got the GDP reporting. Let's see when the GDP reports. Let's see here. And we are, by the way, expecting, as we go there, we're expecting the GDP number to be negative 5%, give or take, 4.9, 5%. It's coming out in about 12 minutes. So the market's already a couple of hundred points weaker on the Dow. If the number is below 5.1, expect that number to get weaker and weaker. If the number is better than 4.9, maybe 4.5, 4.2, then there's a chance the market could rally off of that number. But there's also jobless claims, and jobless claims, we're expecting about 1.2 million, 1.4 million. Last week, we got 1.5 million, and the average is 1.7 million. Consensus is about 1.4, and I'm expecting the numbers to be in line. So for the job reports, look for the number to be around 1.25 million, 1.4 million. Anything above 1.4 million is going to raise eyebrows. And as far as the GDP, look for the number to be around 5%. Anything better than 5%, substantially better, look for a rally. Anything below 5%, look for confirmation of downside. Now, today's Thursday, and today I'm going to give you a stock that I want you to take a look at. Now, I'm not telling you what to do, but in my opinion, this stock is going to go down, and I'll explain to you why. So let's start off with the global market analysis and then get deeper and deeper and deeper. Now, world shares and U.S. futures slipped Thursday as investors focused on surging COVID-19 cases around the U.S. and are dimming hopes for a relative quick recovery. A rise in new infection is causing worries that reopening of businesses closed earlier to fight the pandemic maybe have come too soon. Maybe we've opened things up too soon, despite indications that economies are recovering from lockdowns that are being eased in the U.S. and other countries. Markets in Hong Kong, Taiwan, and Shanghai were closed for holidays. In Australia, biggest airline Qantas announced plans to cut 6,000 jobs and keep 15 more workers on extended furlough. Not good. On top of the lingering concerns over trade tensions, the U.S., China, and reports say the White House is considering, this is bad, fresh tariffs of $3.1 billion worth of export from France, Germany, Spain, and Britain. I mean, really, I think it would be best for us to to cool off these tariffs till the economy stabilizes a little bit. I mean, it's like trying to get somebody with who just had a fever and is getting over a flu to start doing jogging marathons. Let's give people time. Let's give economy time to cool off. My opinion. Broad market has been in rally mode, but recent surge in new infection has undercut the optimism. And folks, the momentum levels have undercut that optimism a month and a half ago. I've been telling you the market's going to cool off, and this is just the beginning. Early hotspots like New York, New Jersey have been steadily decreasing. The virus is slammed in the South and West, with several states setting single-day records, including Arizona, California, Mississippi, Nevada, and Texas. And worst of all, crude oil is falling. Folks, I want to remind you why this is bad. If crude oil can't get above $40, $45 a share, U.S. companies cannot make money on crude oil. Exxon, Mobil, all those, they can't make money. It costs them more than $40 a barrel, or around $40 a barrel, to accumulate a barrel of oil. So prices have to go up, on oil, or we're going to see a massive decline in energy stocks. And energy stocks are some of the biggest, have a lot of market cap. So that is a big concern. Now, looking at the stock market, again, I warned you the other day. I warned you actually a while ago. I said we're going to be sticking around the 200-day moving average, and I explained to you why, and I'll explain to you why in a second again. You see momentum levels. You see that this is a descending triangle. Descending triangles near the 200-day moving average typically break lower. If this breaks, we don't have any meaningful support all the way to the 270 level on the SPY or the 2700 level on the E-mini S&P. But so I'm expecting a bearish market. And again, this picture says it all. Let me show you what I'm looking at. This will make it very clear for you. Look at the overall stock market. And I hate to do this every day, but this is so important. We went high, we went low, and then we went up to about 34 percentile, and now we're turning back down. All of this upside that you've seen, that's just a pullback, a snapback from the massive downside that the market saw in February. The market is not standing on its own 2 feet yet. Look at this. Not even at the 50th percentile, and turning already. I would be very, very shocked to see this momentum level go higher, and this is the 200-day line, especially in light of the fact that if you look at the 50-day line, look at that. I told you right up here we're going to cool off, and we've been cooling off, and I think this level is going to take us all the way to the 30th, maybe 20th level before bouncing up. So we've got a long-term trend that's lower and a short-term trend that's overbought waiting to come down. Now, today's Thursday. I wanted to give you the strongest stock to buy, but I thought about it, and I'd rather do the opposite because right now the market's looking more bearish than bullish for the near term. And I'm looking at Xerox, and Xerox is not only the weakest technology stock, it's the weakest stock. Now, technology has been gaining strength. Look at this. Over the last month, 3 month, and 6 month, technology has been the strongest. Even over the past 6 months, over the last month, technology is leading. So you have a stock that's in the strongest sector over 1 month and over 3 month and over 6 months. And it's really lagging behind. Really, really lagging behind. It's so weak that it's behind the financials, it's behind the utilities, it's behind real estate, it's behind the retail utilities, material. It's below everything. It's the weakest stock. Look at this, down 30% on a cumulative CSI basis. So, looking at the chart of Xerox, look at this. You know how most stocks went down all the way like from 40 to 15, and then they had a dead cat bounce taking us all the way to the 50-day moving average? This thing barely bounced. It bottomed out at 14, almost 15, and it went as high as 20. This stock did not give us a dead cat bounce, which is a great thing for shorts. And then it kind of congested, and it looks like it's breaking down again. Now, here's what I suggest you do. Play this smart. Don't sell it right now. And again, I'm just giving you my opinion. Sell it once it hits the 14 level. 13.99, 13.95, right below the 14 level. Because if you don't, we may be due for another congestion, and this thing may just sit there on the sidelines. I don't think so, because the market's cooling off. But again, just to be on the safe side, put a sell stop, a entry sell stop. You're selling, or you're buying a put, and I'll get into the put in a second. So you enter right here around the 14 level, and if it rallies against you, you liquidate it at the right here at the 1810 level. So you enter on a short at 14, 13.90, and you cover your trade around the 18.5 level. Now, if you're an options trader, you know how I don't like to buy options with a little time left. I like to buy options with plenty of time left. 58 days is fine. You can buy this put. We're going to buy a put. It's not expensive. And if it doesn't give you any action to the downside in the next 18 days, maybe 20 days, you cut it short. And don't even get into it till we go below 14, and we're at 15.5 right now. So what I would do is I would probably end up buying the 14 or the 15 strike price put. I always go to calls. There's going to be a lot more open interest on this as the stock goes down. I can guarantee you that. And even right now, the spread is only 7 cents or 6 cents, so it's not really a big spread. Look at the 14 put. Now, you can go further. You can go all the way to 114 days. I wouldn't do that. You're paying just a little more. You're only paying, look at that. You're not paying that much at all, actually. You know what? Go with this one. Go with this one. The one that expires October 16th. Go with the 14 strike price. The open interest is really good, and the spread's not even that bad. And once we get to the 14 level, if we do, we still got $1.50 to go. You will probably see a lot more open interest. You're probably going to pay, realistically, if you wait for it to go down to 14, you're probably going to pay closer to $2.30, $2.50 for this option. But this option's got so much time value, you can really hold on to it if you want to. If you get hit on this trade and there's no movement your way in 10 days, just liquidate the trade. So again, we're going to short we're going to short Xerox. All right. We're going to short Xerox if it trades below or at 14. It's currently at 15.40. So we want to sell it like right around here, right around this level. We want to see it break the low. If it comes back up to the 1850 level, we want to cover it. And if you're trading options, we can just liquidate those options. Again, let me show you the entry levels. You enter right here, right around the 14 level. You cover your trade right above the 50-day line, right around 1820, 1850. If you're trading options, you would be patient. You would put an alert right now at 14, maybe 1410. You would look at the October 16th put. It's got a lot of time left. And I mean, you can go with this one. You can go with the August 25th, 21st. I don't want you holding it for more than 2 weeks. That's the bottom line. And I want you to look at the 14 strike price. You're going to be sitting on about $1 of premium. If you buy the put for the October month and it doesn't do anything, it's going to cost you about $1. How do I know that? Because look at the 14 strike price. It's at $1. And look at the 14 strike price here. It's at $1.88. So again, you're not talking about a big spread. You're talking about 80 cents a loss on this trade. So again, wait for it to go to 14. It'll probably be at about $250 at that point. These are not expensive options. They don't have a high implied volatility in relationship to other stocks and so forth. Again, you're buying a put. You're buying when Xerox goes at 14 on a stop, on a sell stop, and you're liquidating it on a protective buy stop at 18, 1830. And you're looking at the 14 strike price. I think at that point, the 14 strike price will be near the money. And again, you can go with the 821 or the 1016. Don't go with the 717. And don't hold for more than 2 weeks. If you're holding for more than 2 weeks and it's not doing anything, the odds are it's just going to drift. And before I let you go, boy, oh boy, do I got something for you. Folks, I got something new that's literally hot off the press, all right? And the mainstream media probably won't get access to this anytime soon, not if I can help it. We all know that Wall Street keeps all the best trading secrets for themselves, right? I mean, Jeff was just telling us a couple of weeks ago that pair trading, his specialty, most retail traders didn't even know about it till like 10 years after they were doing it on Wall Street. And it's true, I remember that. Well, I just received a flash drive with a lot of confidential information on it, including a new calendar trick that allows traders to achieve potential gains of 346%, 487%. Folks, even 606%. Want access to that info? I bet you do. This is really amazing trading information, and it's backed by a decade of history. Every trade is backed by a decade of history, not a medium-term history, but a decade-long history that has 100% success rate. This will blow your mind out of the water. Want the access to this info? Click on the link below to get this data now. Mainstream media is not going to get this. Wall Street keeps these goodies to themselves. Get in on this now. Click the link below to see this data now. You owe it to yourself. I'll talk to you guys soon, and you have a great day. Bye.